Hey, good evening, everybody. So, markets continued up today. Trend is up. That gets the benefit of doubts, but there are doubts that we need to keep an eye on to keep us in alignment with what's happening, right? So, trend is up. Prices are coming up to a significant resistance area. Is it likely to get through it? It should get through it based on the fact that this spent so much time going sideways. One of my comments a couple of days ago on this gap up here was that it shouldn't fill the gap. And that thought was based on the fact that after a sideways consolidation, it shouldn't fill the gap. And it didn't fill the gap. It didn't get all that far, but it was a sizable move from the day before, plus filling the gap and so on. So it would make sense for it to not advance too far because of the where it moved from. However, look at what's happening here. And so what I have here, these are the closing advancers minus decliners on a day-to-day basis. This line here is what's called a McClellan oscillator, right? Or this one is sentiment. I don't remember. This one is sentiment. Hold on a second. Let me move this over here a second. And we could look at this here. We could look at both things. So this one is the breadth internal. But I want to primarily focus on this one here. So this line tells us that sentiment has been dissipating, which just totally makes sense because of how much time prices went sideways and went nothing, and the different news items that whipped the markets one way or another. Eventually, they resolved themselves to the upside. Okay, fine, that's great. However, look at these day-to-day information here. This was the day Trump backed off from Liberation Day. And the buying here pushed this advancers minus decliners like up above 2,000. That is super positive. So now it continues here and pushes up close to the same area. Okay, good. On the moves to the downside, all of the selling pressure didn't produce much to the downside. It could have. Right? This is 2020 hindsight. It could have. But when it broke out further, right, there was more information suggesting it would go higher. Okay, great. It continues going higher. On that spike up, it pushes up above plus 1,500. All right, decent. Right? Consolidation, pullback. It doesn't fill the gap. Right? So that's a positive that it didn't fill the gap. Same as yesterday not filling the gap, or 2 days ago not filling the gap. Okay, great. Push up again. AD line or advances minus decliners pushes up close to 2,000 again. Great, right? So lots of buying on a day-to-day basis on these moves. Now you can see where I'm going. Pushing up to near new highs. Q's hit new highs today. That gaps up, pushes up. It doesn't even get to plus 1,500. That's not good. In addition, today, really not that big a deal. It's a down day. It was a little narrow range day, but it's kind of negative on a closing basis with such a little narrow day after a push up like that. Unlike some of these where, it's just mildly negative, just a little bit zero there, under zero. So these are some warning signs. That doesn't mean it can't go higher. It just means that we have to keep an eye on, I guess, news as we always do, or the exit signs, or stops being a little bit tighter because as things are moving up and we're not getting these type of confirming signals from our market internals, it's a heads up. Now, ultimately, it's about the trend, right? Meaning this is going to be major support down here. Right? It'll be marked as a new higher pivot low after there's 3 days. So it's going to need tomorrow to make another higher pivot low for it to mark it, which it hasn't done yet. And then once it does, I mean, even now, we're just going to call that major support since it's made a new high. And I know that, look, unless it comes crashing down tomorrow, where there's no reason to think it's going to yet, um, that's going to be a new pivot low and become major support. So, again, pointing out the fact that breadth was pretty anemic based on the kind of move that we saw on this day. And let me just minimize this. If we take a look around and look at what's going on, and this was kind of surprising how negative the Russell was after this had moved up that it had the prior 2 days. Now, I know it's coming near this resistance area, and one of my comments in the green room at the end of the day was, even though this is negative, and the way, if we look at this intraday, you could see the way it was trending up here so strongly as it got toward that resistance area. Of course, it's going to back off a little bit, but the way it backed off was pretty powerful. And then it couldn't bounce from here intraday. However, my comment in the green room was, what if somehow, right, if it should be able to do it, turn that red bar into a red bar ignored tomorrow? I think that's going to be a screaming buy if we can get a bullish 180 and close that way, because then I'm definitely going to be looking for this to go long and the Russell to play some catch up going through that resistance area. A lot of times what happens, right, this is historically what goes on, is that leaders that have been leading the way up, right, technology leading the way up, it is coming up near this high, real easy to poke up above it, being so close to it like that. As things become further and further away from where it started from and into resistance and greater than 100% retracements, these things typically don't collapse. However, money starts rotating into underperformers, like the Russell. That's the essence of a catch-up trade. But now I need some evidence of that by a red bar being ignored. The transports were down a decent amount today, but not a big deal after the 2 days up. So this is another potential catch-up trade where the transports begin to move higher toward that resistance area. So those are some of the things that we'll be looking for in the coming days. We know that internals are not the best that they should be based on breaking out to new all-time highs. Uh, some laggards need to play some catch-up to see money rotate over there. And something else interesting that happened here today, our S&P sectors. Um, Interest rates have been come down quite a bit, intermediate term interest rates, and even some short term interest rates. So for real estate to have this negative, such a negative day today, and even the utilities to a lesser amount, is unusual. With interest rates coming down, these typically outperform when interest rates come down, and they're not. So, we might come back and look at this in a couple of weeks and say, you know what, that internal breadth, what was happening here, real estate and utilities underperforming, not doing well. Consumer staples kind of make sense that it's a defensive sector that would underperform. Because typically, if the market is going to come down, this would begin to outperform. But when the market's doing well, this has a greater tendency to underperform, and it is. You all probably know how energy came down quite a bit after the war is over, right? The 12-day war. But there are positives. Right? Financials, they're up near resistance, but that was the big gap up, and it's stalled there. So this gets the benefit of the doubt that it could go higher. We'll see if it doesn't. Materials, kind of a rolling top there, but maybe it can turn around. Technology has just been doing well, got a gap up. So, after moving this much and two gaps up in a narrow range day, it does support a thought that this is getting sold into. I mean, it's come out of this consolidation. Why aren't these bars bigger? Now, I know there's economic news coming out the next couple of days. Maybe there's some hesitancy from that. But look, Dan and I want to point out the things that we're seeing It's about education. It's about seeing how it plays out and then trading what is. As always, if you have questions, email us, Greg and Dan at Master Trader.